What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Tuesday, April 2nd. Alright guys, Tesla stock here today down 57 cents per share. That's minus 0.32% in regular trading hours. It is down about $1 in the after hours. Listen, take the after hours movement with a grain of salt. Seriously, the volume is very, very low, and it's very easy to bully and pump, goes both ways in the after hours on that low volume. So take it with a grain of salt. All right, now let's take a look here. Let's try to pull out as much bias as we possibly can using things like the volume profile, the psychological levels, the areas that I expect we're going to see a lot more trading volume once tested, the options bias, right? All those things can help us form directional bias, and then the expected move. All right, really quick, I want to point something out to you guys. This here is what a lot of people might confuse for a repeat offender setup. I get questions about setups exactly like this one here on Tesla all the time in the Roensch Capital Gold server from members, and I think I should clarify because this is a perfect example here. We have the two quote-unquote bounces, right, off of that volume-weighted average price support level. Really all it is the -2 standard deviation band from the volume-weighted average price. Okay, and we have enough room. You're looking at about 95 cents of room in between that band and the 20 EMA. I call that the channel. Now, a lot of traders might look at this setup and say, that's an intraday setup that has edge. I should take the trade when it tests volume-weighted average price support. For me, I don't take a trade like this for two reasons. The first bounce, the setup bounce, was right off the open. I prefer when the beginning of a setup starts to form after about 10 minutes minimum, at least like 5 minutes into the day. This one started to test at 9:31 a.m. Eastern. Not to mention the test was very sloppy. If you guys look here, this test was not clean. Okay, not at all. It actually broke through, and that in and of itself would not have been a good trade. And I want, in hindsight, the first 2 or 3, whether you're taking the third or fourth bounce or rejection, tests. I want those first couple of tests to be clean, as if they themselves would have been successful trades. That's what makes a repeat offender. This, I cannot classify as such, even though it looks like one. So with that out of the way, and I really hope that helps out some of your guys' intraday trading, let's start by taking a look at the bias in the volume profile here on the 5-minute chart. So the moves that I'm primarily interested in on Tesla here today, that dump, a little bit of pop, right, and then real dump off the open that we got. And then I think what we're going to do also is take a look at this move into the close. That's really about it here on Tesla. Let's try to pull out any hidden bias that may be here. Now, let's start from left to right. Here off the open, we got that contextual fade. Okay, but once we moved into the second half of that fade to the downside toward what ended up being intraday lows, we got a couple of out of context pops. This second one here especially, that are a little bit out of context, right? A little bit higher than what we might expect on average for this time of day. And we're seeing, 5 and then 2 out of context contextual red bars, and then 3 consecutive red bars after being broken up by that smaller, more average green bar. Okay, which really, if you look at it on the chart, was essentially a doji, right? Now, to finish that off, we saw that higher volume bar within these 3 consecutive bars, really 5 with that one broken up. That was the low of day. So that makes a lot of sense that we saw volume begin to fade then after. There was, in the second half of that fade downside move, listen, there was a little bit, it wasn't overwhelming, but there was a little bit of hidden bearish bias agreeing with that move. Now, believe it or not, that's not always the case. A lot of people look at the chart and they say, well, of course there was bearish bias, right? The stock went down. Actually, a lot of the time we'll end up seeing on a downside move, if we peel back a layer of that onion, we start to get no bias at all. Sometimes we even get bullish bias, which is a little shocking, and vice versa. Today, though, on that move, we did see, again, not as overwhelming as one might think looking at that move, but there was some hidden bearish bias in the profile. However, as we move later into the day, first of all, this first 5-minute bar after the bell, we know, guys, that is going to be fund and institutional rebalancing. It's highly likely, all right? Over 4 million shares being triggered by algorithms as soon as the bell rings. We have to ignore that first candle after the bell. But you guys hear me say a lot that the most average volume profile looks like a U, right? Follow the cursor, where the final bar of the day finishes between 1/3 and 2/3 the height of the opening bar. That's very common. Of course, it's not always going to look that way. But here today on Tesla, we saw that closing bar, which happened to be a green bar, pop a little bit out of context, right? That opening bar was just over 3 million shares. We saw nearly 3.5 million on the closing bar, which is a little odd, which leads me to believe that they're on that first, that bar right before the closing bell. Again, we're not seeing 4 consecutive bars at 3.5 million shares. It's just one, right? There is a little bit of a wick at the top of that, which leads me to believe that some of the volume there was, of course, being contributed by sellers, a little bit of a battle bar. But it's worth noting that we are seeing a very slight amount of bullish bias heading into the close to agree with the actual price action on that candle. Now, let's move on. Let's take a look at the psychological self-fulfilling prophecy levels that I'm paying attention to here on Tesla tomorrow. Now, back on Thursday, heading into the weekend, we closed testing that 200 period moving average. We gave that up today, intraday. Okay, on pretty big volume too. We retested it into the close and failed. Bears, you also have this 50 period coming down, meeting the 200 period. These are levels that everyone's watching. That's the only reason I care. Okay, the 30-minute chart is a very popular time frame as well. Bears, you want to see that these two levels coming together beef up the strength. Any retest, you bears want to see a high volume rejection. Okay, bulls, it's becoming increasingly important now, on the 30-minute in particular, that we reclaim these levels. Ideally tomorrow, really as soon as possible. Intraday, on as much volume as possible, right, which isn't really going to be pre-market. Ideally intraday, we see an upside breakthrough on as much volume as we can get. A retest on lower volume, right, and a high volume bounce, confirmation, move away. The market basically saying, yes, we have a high level of confidence with a lot of market participants agreeing that we're holding these two moving averages on the 30-minute, at least here in the short term. Let's move on to the 4-hour chart. All right, you look here, that 50 period, that white line, everyone's watching it. It's highly in play, okay? We gave that up today. We gave it up on big volume, tested it into the close, and failed. Bears, this is your retest right now. You have yet to confirm. Bulls, that's good news. The bears have yet to confirm on a high volume rejection that 50 period as a short-term resistance here on the 4-hour. And by the way, the reason I'm speaking as if everyone's watching this is because everybody is, right? That's the only reason I care. The self-fulfilling prophecy mindset. And bulls, because the bears have yet to confirm, there's still an opportunity here in the very short term to make this a false downside break. Get back above that level, retest it, spend some time retesting it if necessary, and then get a lot of volume on the inevitable pull away if we can reclaim that to begin with. All right, volume is the key because volume is a big sample size agreeing. Now, the real story, the daily. This is the most important chart. Let's take a look. That 50-day moving average currently at about 186.80. All right, not immediately in play, but it will be at some time, soon, as that continues to come downside or the stock pops. All right. Tesla currently finds itself in a really big channel that I've had drawn on this name forever. Right between that 166.50, 167 and that 177.50 to 180. Those two levels, and each level in and of itself is a range, as just said. But you can see that channel is very obvious. Bears, we're currently testing the top end of that channel, that 177.50 to 180 range. Okay, we're near that top end. You guys want to see that as a ceiling to help push us down through the current floor. You ideally want to get below 166.50 as soon as possible. Okay, understand that as of right now, that move is approximately to get really down through there. You're looking at least a 5% move. Whereas bulls, to reclaim the top end of that top of the ceiling of the channel, right, which is really how we get out of this channel, it's about a 3% move. Okay, if that, to get above 180 and hold on the outside of the entirety of that channel. So that's the goal. All right, it's not really 177.50 because the real ceiling is a range of 177.50 to 180. Bulls, we want to get up above 180 as soon as possible and hold 180 as a short-term support level. That can open us up for a move upside for a test of that 50-day, which currently sits at 186.60, 186.70. Now, implied volatility is on the rise. Understand, guys, that's in comparison to the last 3 months or so. The higher IV goes, the higher the risk of IV crush. Okay, that's a really big deal. And by the way, as a stock comes lower, I think I would prefer to see IV coming higher rather than going lower if I'm a bull. Okay, because IV is a really good indication of how comfortable the options traders see the price of the stock. If you're a bull, you don't want the stock price low and comfortable. You want it, if it has to be low, you at least want it to be uncomfortable, which is a high IV. Okay, on the flip side, if a stock is rising rapidly and you're a bull, you don't want the stock to be rising rapidly with massively high IV unless you own options and you're just trying to cash out for as much as possible. Okay, in which case high IV helps your options. But if you're looking to hold for an extended period or you just have shares, you want the stock price to be rising rapidly with IV low and comfortable. Okay, currently it's high. Now, the expected move, let's take a look. The next expiration we have is Friday. Plus or minus $10.72 per share. There is not a directional bias in the expected move itself. This is where we get our volatility bias. So, by the end of the week, if you divide that by 4, since there's no earnings event, no outsized on any single day, right, by the end of the week, right, the next earnings is April 17th. That gives us about plus or minus $2.68 per day. But that's assuming a green or red streak. So what I like to do is add about 50% to that, to account for a mix of green and red days, and it gives us about $4 plus or minus in terms of expected volatility per day is what the market is expecting out of Tesla. Okay, for the next, at least today, for the next week or so. Now, if you disagree with that to the upside, maybe you're someone who looks to buy contracts, meaning you have a directional bias with more expected volatility. If you think volatility is going to be lower, maybe you're someone who trades, neutral spreads, looking to capitalize on IV crush. Now, one more thing we can do for a little bit of directional bias here on Tesla. Let's take a look. The options bias. 1.3 million total contracts traded today, 690,000 calls, 615,000 puts. So a slight call side bias on the overall ratio. And if we look at the short-term bets being placed, the 0 to 20 delta range, 259,000 calls, 248,000 puts. So a very slight call side bias on the short-term bets, but it's very slight. It's essentially neutral there for the short-term speculators, right? But the overall, we are seeing, again, it's not overwhelming at all, but a very slight call side bias here on Tesla today. Listen, if you got value out of that video, please subscribe to the channel. I greatly appreciate it. It helps out tremendously. Hey, if someone you care about, a friend of yours, owns Tesla or maybe is interested in it and you think they'll benefit from the data in this video and the insight here, send them the video, see if they're interested. Listen, I appreciate you guys greatly, and I'll see you in the next one.